Fuck a duck and call me Chuck. Cardano ADA's price action is up over 9% in the last 48 hours. But this shit is about to drop, guys. Let's get it. Hi and welcome back to the channel. My name is Nick and today we are of course taking a look at Cardano ADA's price action, sharing my thoughts and opinions on where I think the price action is heading. As I get into today's video, guys, do me a fucking awesome favor, smash that like button. Let's send this to at least 500 likes on today's video. Much appreciated. If you happen to be new, welcome, subscribe and you won't miss another video update. Let's kick things off by taking a look at what's going on then with Cardano. So following on from our previous ADA video, we're talking about the area of 42.27 to 44.12 being the area of previous support. Every time we've come down into this area, you can see right in here we've kind of reversed on out, and this is no exception. But there are a few things, a few warning signs with this particular area, because we did see our first closed candle in here over on the 11th of May, the 12th of May, the 13th, the 14th, and if it wasn't for Bitcoin reversing the way that it did, I think we probably would have closed lower than this range. Now this move to the upside is also hitting an upper area of previous resistance. We can see that as well. I'm going to go ahead and draw that in here with a little yellow box so you guys can see. We're talking about the range of 46.73 to 47.59. This is the area of resistance. It's been a pretty steady resistance for ADA. A closed position above. I'm actually going to expand this up just a fraction, as I think we probably want to be looking more towards 47.85. So 47.85, anything above that closed wise should be pretty good. But we do see, of course, some negative price action in relation to our moving averages. The white line is the 200-day exponential moving average. The yellow line is the 50 simple day moving average, and there is a death cross here that occurred on the 15th of May. We can also see the blue line, that is the 50 exponential moving average, also that crossed lower than the 200 on the 11th of May. These are bearish tells, basically showing that we have short-term price action lower than longer-term price action on an average kind of approach. Also, when we have a 50 SMA crossing lower than a 200 EMA, this is known as a death cross, and of course we usually see these because they're laggy. We usually see a bit of a bounce before we continue the moves to the downside. So although we have some interesting price action most recently, up over 9% since we had our local lows on the 15th of May, we are obviously facing resistances here, and we are likely, in my opinion, to see a rejection from this level. Our issues really do arise when Cardano's price looks towards 38.65 cents. Anything lower than this is going to trigger an impulsive breakdown, which we want to avoid. Our actual target range based on rejection from our 200 exponential moving average on the 22nd of April is still set at 33.83 to 37.49. What we want is a complete breakout situation for a move to the upside above 55.93 if we don't want to be bearish on the markets. We need the bulls to be really clear about what they need to do here. They need to push the price higher than 55.93. Failure to do so, we should see slippage to the downside, unfortunately. Let me show you what this looks like from an Elliott-Wave theory point of view. Elliott-Wave theory is fantastic. It's 100% accuracy if you backtest it and apply the rules as they are intended. If you do not apply the rules correctly, then unfortunately, yeah, you're going to get really bad results. But again, you know, it's very logical. It has set rules. Don't manipulate the rules. As long as you keep to the rules, then everything works out nicely. Failure to adhere to the basics of Elliott-Wave theory, then you are going to end up in a world of pain, and it's never going to work for you. But here we can see that we are in a potential 5-wave move to the downside. The avoidance of 38.65 and a break above 55.93 prevents this structure from playing out, and it just becomes a simple 3-wave correction pattern. Of course, we want to be really aware that unless we can break out, we are still looking for these targeted moves to the downside. So Elliott-Wave theory and smart money concepts both align everything perfectly here. We can see change of characterization to bearish structures on the Cardano ADA chart in the same way that we see for many other cryptocurrencies as well during the same move to the downside on the 13th of April. Okay, so here we can see that we did have a little bit of consolidation, this kind of continuation pattern almost, with the potential idea that we could rally up higher. I just don't think that's going to be the case. And we do see continued potential moves to the downside with a weak low, strong high, indicating that we are in very bearish territory. Moves lower than obviously 38.65 is going to be our 1.618 trigger, is going to indicate even more slippage. If we come down lower than the previous swing low with a closure, that's going to give us a break of structure to confirm our bearish pattern, basically. So everything's not looking great from a smart money concepts point of view. But what about other indicators? What other indicators are going to be helpful in understanding whether or not we're in a breakout to the upside situation or just a continued move to the downside that is highly likely? Well, we can take a look at the stochastic RSIs. You can see that they are over the daily 8-hour, 4-hour, 1-hour time frames, indicating that this move to the upside hasn't really got a lot of momentum behind it, and it is basically just going to fizzle out, indicating that we are likely to see a significant reversal in the market, specifically on the daily time frame. But we can still push up a little bit more beforehand, okay? So we're not saying that immediately going to reject and we're immediately going to be moving to the downside. All I'm saying is there's a high probability based on everything I've been talking about here, Elliott wave theory, smart money concepts, the stochastic RSIs all being overbought on the small timeframes as well as the larger timeframes. We are looking for corrective action on ADA, okay? We might not like to hear it, we might not want to see it, but it's what the data is suggesting. We can also take a look at our relative strength index on the divergence indicator, the yellow line being the relative strength index. We had some hidden bearish divergence on the 9th of May. Again, you can see here this correlates with hitting that resistance area that we're facing right now. And we are just below that 50 level on the on the relative strength index, which still puts us in that resistance area. You can see that we've been rejected here before and can be deemed bearish until we are closed above that 50 level. Momentum obviously has progressed from oversold to this midway level on the RSI without doing anything too impressive in terms of price. We've basically just been ranging sideways, and we've gone from the low area here on the RSI at 25 all the way up to where we are now at 49, and we really haven't changed much in the way of price action. Shows us that there isn't really a lot of momentum in the price action for ADA here on the daily time frame. So as much as I want to be really bullish on ADA, because I do hold a significant amount of it and I do believe in the long-term future of ADA, I believe that the short-term view here over the next few weeks is unfortunately a bearish one, and one that we need to kind of consider. Great that we've kind of pushed up a little bit here. We are obviously potentially going to push up a little bit further into those resistances, but ultimately we are looking unfortunately bearish on the daily time frame. Roll this up though into a weekly time frame and things aren't that bad. I mean, we can see here that we are of course below the 200 weekly EMA, and we are facing that as resistance right now, but we're finding good clean support on the 50-week SMA, the simple moving average. So although I am still expecting us to see some volatility, I'm still expecting us to see a little bit of pain here on the kind of smaller time frames, the weekly gives me a little confidence. We take a look at our RSI, though it is lower than the mid-level here on the weekly time frame. Our stochastic RSI is actually showing us with some pretty decent levels of oversold, with a positive change here on the yellow-white lines, as you can see at the moment. Though this shows us with progression to the upside, I do not believe that we're likely to see a reversal just yet, not until the other time frames, the smaller time frames, catch up with the bigger macro levels. Okay, so although it's good to kind of take a look at and to know that the weekly time frame is in a reasonable position, this is going to take months to play out before we actually start to see those next legs to the upside for ADA. Now, am I concerned? No, I'm not concerned. I ultimately am a long-term believer in ADA and everything that's going on here. It's being built for the future. It's not being built for quick pump and dumps and things like that. And we do have good structured moves to the upside. This correction to the downside, if we do see a 5-wave completed pattern as indicated on the daily time frame, I would expect a bounce and then a further slippage to the downside at a later date to complete off a wave 2 situation. Let me zoom out because this is where the beauty of the weekly time frame really comes in. If you take a look, this would be a wave 1, this would be a wave 2, we'd have a fantastic wave 3, 4, and then 5, where I do target out somewhere between $5.34 $4 and $12.73. And I know that's going to people are going to hate on that as well, because the market cap is just going to be so trippy for their little heads to kind of get their heads around. But for the most part, market cap is not meaningful in the crypto space. It doesn't show you liquidity, doesn't show you the amount of money that goes in there. It only shows you the price multiplied by the supply, which means it's more important to focus in on price rather than market cap. What is it that moves price? It's supply and demand. We've been through it many times. We see the TVL for Cardano holding up incredibly well at the native token level, although the dollar value as price has slipped has obviously gone down quite a bit. I believe I talked about this previously with about 49% move to the downside on TVL from a dollar point of view, but only 19% when it comes to the native token. This is an indication that actually a lot of ADA remains locked up, even though the price volatility is there. So if we do see a significant slip to the downside, I do think it puts us in a much stronger position for some really, really juicy gains, somewhere between $5 and $12 in the longer term. But again, you can let me know what your opinions are in the comments down below, whether you think that's a juicy price prediction that's accurate and it's going to come in, or whether you believe that it's way too optimistic and actually, Cardano is a ghost chain and simply is just going to be a stable coin hovering around this kind of 30-40 cent range. You can let me know your thoughts in the comments below, and we can argue until we're both blue in the face, I guess. But if you haven't done so already, I urge you guys to check this video out right here. We're talking about some of the other fantastic things that are going on in the crypto space.